Over the past few days, centralized cryptocurrency exchanges have recorded a significant drop in Shiba Inu reserves. Roughly 500 billion SHIB tokens have been withdrawn from these platforms, signaling a major shift in investor behavior. This movement is not just a minor fluctuation, but a notable outflow that could have implications for the broader market. The tokens are reportedly moving into private wallets or cold storage, suggesting a growing preference for long-term holding or staking rather than immediate trading. This trend is reflected in the net outflows of SHIB tokens, which have now exceeded 430 billion, with total exchange reserves falling to 81.2 trillion. Such a drop in liquidity can affect how quickly large volumes of SHIB can be sold, potentially reducing the likelihood of sudden price drops due to panic selling. The data shows that more tokens are being moved out than deposited, pointing to a possible shift in investor sentiment. When assets are held off exchanges, they are less likely to be used for immediate trading, which can stabilize the market in the. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Short-term, large holders, often referred to as whales, are also moving their SHIB holdings out of exchanges, which could indicate a strategic decision to avoid selling pressure. Despite this movement, the SHIB network is still seeing an increase in active addresses, suggesting that user engagement remains strong even amid market caution. This rise in activity indicates that the network is still attracting new participants and that the underlying infrastructure is functioning well. The contrast between declining exchange reserves and rising user numbers is notable. It suggests that, while investors are pulling back from exchanges, they are still participating in the broader ecosystem. This could be a sign that the market is maturing, with users focusing more on long-term value rather than short-term speculation. The shrinking liquidity on exchanges is often seen as a bullish sign in crypto markets, as it can reduce the risk of sudden sell-offs. When fewer tokens are available for immediate trading, it becomes harder for large volumes to be sold at once, which can help maintain price stability. However, the full impact of these outflows is still uncertain, as market conditions can change rapidly. Investors will be watching closely to see if this trend continues and what it means for the future of SHIB. The next key signal to watch is whether the outflows remain consistent and if they are accompanied by any major price movements. If the trend persists and more tokens are moved into private storage, it could indicate a broader shift in investor confidence. On the other hand, if exchange reserves begin to rise again, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. May signal a return of selling pressure or increased trading activity. The active user base remains a positive indicator, as it suggests that the network is still growing despite the current market environment. This could be a sign of resilience and long-term potential for the Shiba Inu ecosystem. As always, investors should monitor both on-chain activity and broader market sentiment to make informed decisions. The movement of SHIB tokens is one piece of a larger puzzle, and understanding the full picture will require tracking multiple indicators over time.